morning, everyone. Thanks for stopping by for another video. This one is going to be about how we pay ourselves when you're self-employed. Again, those of you who follow me know that I do some soft washes and plowing. So that's kind of where my background comes from on paying myself. But this is going to apply whether you do lawn care, whether you paint, whatever kind of business that you run, you're going to have to pay yourself. You're going to have to look to see whether you're an S corp, a C corp, an LLC. There are a few different ways in which that works. I have an LLC, so this is going to be based off of that. This is not tax advice. I am not a consultant. I'm not really a financial guy. This is just what I do, and this is me showing you what I do. Look into this yourself, and hopefully this helps. So first off, the smartest thing that you can do when running a business is having a separate business and a separate personal checking account. Okay, you want to have your money separate. Run the business individually from your personal finances. When money goes into your business checking account, when I go out and I wash some houses, wash some properties, collect some money for the plow season, that's revenue for the business. When I have to go and fix some fittings on my hoses, buy some new chlorine, or put new tires on the truck for plowing, that is an expense for the business. Once all the money is made into the account and all the expenses for the business for that year are spent, you're left with a profit. Okay? The business is left with a profit. What can we do with that profit? Well, two main things. I want to pay myself, right? I'm not working my company for free. I have bills that I need to pay on my personal side, my mortgage payment, going out to eat, doing stuff around the house. Individually, we need money in our pocket. All the profit from the business does not need to go to me. I need to keep money in that account for business capital. Some of that could be getting a new truck, a second truck, new wash equipment, better marketing, a CRM system, an employee, whatever that might be. On the business capital side, you need to have money there, and that is going to come out of your profit as well. So let's look at profit of $10,000 a month. Some simple numbers here, easy numbers, also realistic. The business is profiting $10,000 a month. So if you were to go back to a previous video where I was showing you some of the breakdowns of my monthly expenses for my business, you'll see that this $10,000 is a pretty realistic number for a wash company after all the expenses are out. So with that $10,000, again, for simple numbers, let's say that we're going to pay ourselves $5,000. So that's for the month, right? That would give someone about $60,000 a year. This is pre-tax. So we're going to take $5,000 out of that business account using a check, electronic transfer, whatever it may be. I prefer electronic transfers. For my LLC, again, if you're in an S corp or a different sort of tax qualified business, you might have to do payroll. Again, you're going to have to look into those sort of things. But for an LLC, a self-employed LLC, one member, I can simply just write myself a check or transfer the money to my personal account. So now my personal account has $5,000 in it. That left $5,000 in my business account. So the new monthly business profit is $5,000. So when you pay yourself out of an LLC as a self-employed, that counts as a qualified tax deductible expense for your company. Isn't that awesome? So paying yourself means that that's another $5,000 out of your business account that you don't have to pay taxes on the business side. You're just going to have to pay ordinary income tax on the personal checking side or on the personal income side. The IRS isn't great, but there are some nice benefits and loopholes if you're working for yourself. Again, one of them, it's not really a loophole, it's just a benefit. They want people to be have advantages for being self-employed. um, promoting capitalism. The tax deductible payment of the owner of that company is a really nice benefit. So, taxes, just what we were talking about here. What to do on the personal side here with taxes? Well, this is a chart from 2021, and again, that $5,000 a month on the personal side that you are paying yourself is going to award you roughly $60,000 a year before taxes. Now, there is no payroll, so when that $5,000 goes from your business account to your personal account, there is no tax deduction. There is no payroll tax like you do if you're working a 9 to 5, where you just get the already taxed amount coming to your check. This $5,000 paycheck is pre-tax. So let's look at this here. If taxable income is between 54 and 86, you're going to do 6,200 plus the 22% of any amount over 54. So we're not going to look at the whole math on this because it's not really important. But what I'm going to show you is this 22% here. I like to be safe, and I'm going to do 25. So of that $5,000 that goes into my personal checking account from my business account, I'm going to multiply by 25% of them. That's going to be my monthly tax rate on that dollar. And that's going to be $1,250 a month in tax that I need to set aside. So that's going to be your FICA and your disability and maybe your unemployment, all the stuff that Uncle Sam already takes out of your 9 to 5 paycheck. You need to be doing on your own now, since you don't have a payroll system in the back office there at your job. So what I like to do is set up a savings account along with my personal checking account. So every single month, that $5,000, if that goes into your bank account, it immediately peels off that $1,250 for tax and puts it into a tax account. Now, what's beautiful about that is that we're really only calling for 22, but we're doing 25%, so there's a little bit of a cushion. Multiply these numbers by 12, let's say, a full year. And when you get to tax time, the tax man's going to say, okay, we've looked at your business account, your personal account, we've looked at the income, the expenses. Looks like on the personal side, you owe $8, $9, $10,000 in tax. Are you going to be ready to write that check? Are you going to be smart enough to have that money sitting on the side, ready to write that check like a good businessman? Well, you will now, because this personal savings account right here is going to have over more than enough money of what the tax man is going to want. And you're just going to be able to write that check. You're just going to be able to peel it off. You're not going to have to dip into your personal account, your personal savings, because we are diligent with our money. And it's all set up. So you have your income on the personal side, and you have your savings for taxes. Easy. We just make this easy for ourselves, right? We got a business to run. Can't be worried about the financial side of stuff bogging us down. We're going to automate it. So here's what we want to do. We want this to be automatic. You don't want to have to go in and finger around with this every month on the calculator. What I like to do with my banking is automate everything. My bank, just like every other bank, if you log online, you can set up some automated move money from my business account to my personal account. I want to repeat this transfer. I want to do it every week. I want to be paid every Monday, and I want to do this until I cancel. Okay. Now on the personal checking side, as you can see right here on the left side under the move money, now we're looking from a move money from the personal checking to personal tax. I'm also going to automate that. Every time that my paycheck hits my personal account, I want that tax peeled off. I don't want to dip into it going out to dinner, to the movies, out to the bar, whatever it may be. I want that tax money thrown in to that tax pile of savings right away. So let's take a look here. What have we covered here? We first had our business account. We had $10,000 after expenses. Another expense to that $10,000 is our paycheck of $5,000. Left the new monthly business profit of $5,000. So if you multiply that again by 12, your business after expenses is also profiting $60,000 a year. Now, again, we're just using simple numbers, but as you guys can see, this is realistic. It's plausible. These are real numbers here. Your business checking account now, your end of year, so this is separate from your personal. Your personal, your business, your paycheck is going to go in there. You're going to set up your tax bracket depending on what you're getting paid. You're going to peel that tax money off at the end of the year. Your accountant's going to say, write me a check for this amount. You're going to write that amount. On the business checking side, right, we left all that money in there. That's $60,000 of profit after all of our expenses. Your end of year profit will then be taxed accordingly to the state, Fed, for your LLC, whether it's a C or S Corp. So again, if I have $100,000 in my business account and I leave it in there after all my expenses, right? At the end of the year, the IRS is going to say you owe a percentage of tax on those business profits. Flip side, if you want to pay yourself really well, if you're not worried about a war chest, if you're not worried about capital growth of your business, if you want to spend your business account down to nearly zero every single year, you can also do that. You take that $100,000, you pay yourself really well, you upgrade your truck, you do some capital improvements, you spend that $100,000 down to $5,000. Well, your business is only going to owe tax on $5,000. Now you're going to have a higher tax rate on your personal side because a lot of that $100,000 went to, instead of maybe $5,000 a month you were paying yourself, maybe you're paying yourself $8,000 a month. So you are still going to be paying some taxes, but some things that you need to look up here and see how to run your business for yourself. Again, you want to reduce your company taxable income further by taking advantage of any tax deductions, any sort of credits. Again, this is all very high view, overview, bird's eye view, I guess is the word I'm looking for. This is not necessarily advice, more of just some frameworks for you guys to build on and see how this might work and run for your business. So this is really how you pay yourself when you are self-employed. Money goes into the business account. We have expenses. From that business account, we pay ourselves. When we pay ourselves, the money goes right to our personal checking account. We peel off those taxes. The rest is for play, for bills, whatever else. You want to automate that stuff, and you want to be the king of your castle. You want to be able to run your bank, your Federal Reserve, the right way. No one's going to manage your money besides you. And the biggest thing that can really hurt small business guys is they don't set up an LLC or an S Corp or a DBA, and they're out making all this money. They're out making $5,000 a week. It's all going into their pocket. They're not planning for taxes. They're not leaving stuff in the business. And then taxman wants money, and there's no money left. And the truck breaks down, and there's no money left. And you have an insurance issue, and there's no money left. So this is how you separate everything. Your business has money, and you have money. You might be the business owner, but you are really an employee. You are running that business. The business is its own machine. So hope this was helpful, and please consider liking and subscribing to support the channel to keep some more of these videos coming. They take a lot of time. I constantly see comments from you guys that they're helpful, and I'm glad to see that they're helpful. Please help me out. Share it to a friend, like and subscribe. Thank you.